Thank you for joining this investor webinar this morning with ASX listed Iondrive Limited. That's ticker ION. Iondrive is a battery technology development company, primarily focused at the moment on their very exciting battery recycling DES technology. Heading the call for us today is Dr. Ebe Damasey, CEO of Iondrive, who has over 25 years experience in the startup and technology sectors. He's not alone. He leads a highly experienced team of senior executives with experience in bringing other exciting technologies to market, which explains the rapid progress that they've made to date and is key to how Iondrive are positioning themselves to be a leading battery recycling player in Europe and globally. The latest milestone that we all saw was obviously the PFS that they released recently, which highlighted the vast market opportunity for their tech and its technical and commercial viability. On the back of that announcement, Ebe is going to provide today an update on Iondrive and progress on their exciting battery recycling project. Ebe will make some comments for about 15 to 20 minutes, running through some slides, and then there will be an opportunity after that to ask questions via the chat function on Zoom. Over to you, Ebe.
Thanks, Aidan. Thanks for the kind introduction. Thanks for hosting us. So I want to share our pre-feasibility study on greener and cheaper battery recycling technology. So we've got the mandatory disclaimer, but just want to talk about the PFS update and significance of that, following just a bit of background, and then emphasize the technology de-risking that we've done in parallel with the commercial de-risking, and then at the end just look at what we've concluded from the PFS and what the next steps are. So the background, I think the audience has been on the journey really understanding what our market opportunity is. So it's enormous, with 11 million tons of black mass coming online by 2040, which represents about $100 billion per annum of recoverable metals in that black mass. We've got a very innovative and first-of-a-kind depotectic solvent process that have a much smaller environmental footprint compared with conventional battery recycling technologies like pyrometallurgical processes or hydrometallurgical processes. And we've completed large-scale trials and have that independently verified by a third-party organization, IMO, or Independent Metallurgical Operations in Perth, that's underlined the technology scales. And we set out to complete the pre-feasibility study by end of October, which we've done. So giving feedback on that. And then commercially, in parallel, we've established a foothold in Europe with PEM Aachen University and TNO in the Netherlands. We'll talk more about that. And then just finally, whilst we well funded for growth, we're also looking at co-funding the opportunities or non-dilutive funding opportunities through grants, both in Australia and Europe. So it's an exciting talk, and looking forward to take you through what we've done. So in terms of commercialization pathway, which is a very conventional one, the technology development, we've scaled up to large scale, and now with approval from the board to proceed to pilot plant scale, given the success of the PFS. Also worth noting that in parallel, there's been a significant drive on market and development. So creating those strategic partnerships with industry partners and government, and that led to the breakthrough in the European market. So this is what we set out to do with the pre-feasibility study, noting that it was a techno-economic evaluation primarily, and also a decision point to proceed to the next stage, given all the de-risking strategies, activities that we've had involved with this. So looking at that in a bit more detail. On the technology side, we first started off with Lycopodium in Perth and did a technology review for us. And we started with large-scale bench trials ourselves, so progressing what the University of Adelaide developed in concept, and had that work verified by IMO, as explained earlier. And that was really important for us to, stand in front of investors, to have proof of concept that the chemistry scales. And the outputs from those trials were used by Wood for the design of a large-scale commercial process. So they developed the flow sheet and capex and opex estimation, and the same with a US-based company, Koch Modular, and that specializes in distillation and solvent extraction. So they did a concept study for our solvent recovery section, and all of that transpired into capex and opex for the processes. The second basket of de-risking work was commercially. So we started off with a very detailed market research study performed by Row Motion that really colored in the landscape for us on battery recycling. We've done our own economic modeling internally. And then very importantly is we use PEM Aachen University to do a benchmarking exercise for us. So the capex and opex work that was estimated by Wood and Koch Modular respectively were benchmarked by PEM against a standard hydromet process. And we'll talk about the results of that. But PEM also performed a competitor analysis in Europe for us to really illustrate what the competition's aspirations are in terms of the technologies and when they would come online. So that was really, detailed information on commercial de-risking. On the execution side is having a really good team that executes on the technology development side as well as the commercialization. And we're following a very rigorous stage gate project execution model, as well as our ISO 56000 innovation management system, which we'll talk about later. And then finally, all that work in parallel on the strategic partnerships that led to the establishment of a consortium in Germany and the pan-European drive with TNO in the Netherlands. All right, so let's start with just unpacking the technology de-risking, firstly with the large-scale trials. We've got the results tabled here, and it's worth noting that whilst we did the large-scale trials, we also did continuous improvement and developed a pre-treatment process to remove impurities that's typically found in black mass and that we know interfere not only the DES process, but also conventional hydromet processes. So that was a really big step forward to us to be able to remove those impurities. And by virtue of doing that, also ensuring that any type of black mass, which can be very mixed, is processable. In other words, creating a very robust process that translated in very high recoveries of these metals. I've mentioned earlier the importance of having a third party to validate the chemistry at large scale. And the other significant item from this work was to quantify what the organic solvent losses could be or are, and that we typically use in our process, and very pleasantly surprised to see that it's less than 2%. And in our economic modeling, we've actually assumed far more solvent losses between 5 and 10%. So we got an upside on that profitability. And then finally, really have proof of concept that the chemistry scales and that we're ready to explore commercial development. The laboratory work was followed up with the engineering studies by Wood and Koch Modular, respectively. So that culminated in process flow sheets, and that both engineering companies have a lot of confidence in that we'll be able to process the black mass to very high purity products, so battery grade materials for the main DES process, and then for the solvent recovery, same high levels of confidence to produce very high purity recovered solvents, if it is done indeed not required. We believe that we could get away with lower purities for the recoveries. So both her studies had capex and opex estimations of plus minus 50%. And it was really interesting, just quoting one of the engineers on the Wood study, where they looked at the capex and opex and said, hell, you guys are showing the competition taillights, which we appreciated. So the conclusions from the technology de-risking were firstly that the chemistry scales. It's got higher metals recovery than conventional hydromet processes. We're confident of high solvent recoveries with environmentally acceptable solvents. Technically, it's feasible, and CapEx and OpEx wise, we thought we were highly competitive. And so it's an engineering challenge to design a commercially viable process now. So to that end, the next steps are to progress with the pilot plant, to go from technology readiness level 4 to 6, to go from a batch large scale to a continuous integrated process, which is more reflective of a commercial operation. And the other next step is for our pre-treatment process is to conduct the same concept study with wood to get more accuracy on the CapEx and OpEx for that pre-treatment process. And we'll discuss that later when we come to economic modeling on what assumptions we have made to date and why it's so important to get quantified numbers with higher accuracy. So the commercial de-risking work looked at the benchmarking study. So those CapEx and OpEx numbers that were generated by the engineering studies is to really understand how competitive our process is versus a competitor. So that work was done by PEM, Aachen University, that used the CapEx and OpEx numbers from wood and compared it against a similar sized operation that's in their database. Obviously, all of this work is commercially high in confidence, so we can't declare much of the information other than being transparent in producing data that's been normalized in euros per ton. So the results from that benchmarking study and internal economic modeling as presented in this table. So maybe if I just get a pointer just to explain what we've done here. So this is the conventional Iondrive process where we've got the euros per ton for revenue, OpEx, and EBITDA, and then a CapEx number. And if we bolt on a pre-treatment process, we've assumed a 30% CapEx increase and 30% OpEx increase in the manufacturing cost. So, really the thumb sucks, just to give an indication of what that could do. And then the third column is the benchmark numbers. So one can already see really interesting, firstly, is on revenue that we're more competitive. And that's just by virtue of having high recoveries and a different product mix with, in our case, higher product sales pricing. And CapEx is significantly lower than the competition. And then just on the fourth column here is if we use benchmark minerals intelligence forecasting pricing data out to 2035, and we compare that with the original DES process, just to understand what the increase in commodity pricing or the expected forecast commodity pricing increases will do to revenue. It's essentially double. So there's a big improvement for us, uptick for us going forward as the commodity prices increase and increases the profitability. So just noting here on this table that we've made that assumption with a 30% increase in CapEx and OpEx, and we will validate that with the wood concept study to get more accurate numbers. We've excluded the cost of black mass for all these operations, and the reason for that is there are various business models that we anticipate going forward, either buying black mass or producing on a tolling basis as another example. So to get comparable numbers that we've got confidence in, so we've excluded that cost of black mass. So we've concluded that the DS process is very competitive on CapEx and on parity with OpEx if the pre-treatment process is included. And finally, I've mentioned the sales revenue that's higher and it's going to increase higher going forward with the commodity pricing. And then worth noting that this is our internal economic modeling. So we've engaged a third party to do independent economic modeling, and we hope to have those results published in 3 weeks. So the conclusions from the commercial de-risking exercise was commercially we very not competitive, with CapEx significantly lower. It's also very profitable. So the DES process is more cost effective than the EU competitors, and that profitability is expected to grow in time with the commodity price increases. The next steps for us here are firstly to do that independent third-party economic modeling to assess the NPVs and IRRs across a range of scenarios, and also develop future pricing models using benchmark minerals intelligence for both the product and the black mass pricing. So ultimately, the conclusions for the PFS, firstly, is just a reminder, or this is something that PEMMotion published on LinkedIn in August. The top 10 reasons for why startups fail is that don't have a market, and we're certainly not in that case. Being invited into the European market to address a problem. And then really interesting is the de-risking activities or criteria that they see is you've got to be market competitive, you've got to have innovation in your technology, your technology needs to be scalable. Team experience is really important to be successful in commercializing the technology. There's got to be customer demand. And then certainly within Europe, we've got all those regulatory tailwinds. So just wanted to reintroduce this slide as, we're certainly ticking all of the boxes in de-risking activities. So the conclusions, we're certainly a greener and a cheaper process. On the technology side, we've shown that we're technically feasible with a compelling environmental value proposition. Commercially, we've shown that we're viable and not competitive, and with that increasing profitability expected over time. And then thirdly, on the market side, that Rome Motion study has highlighted the attractiveness of the EU market for a novel process. The PEM competitor analysis showed the advantage of an early mover to capture market share. So that's really important for us to be involved with the PEM consortium and the TNO Pan-European Drive, is to ensure that early mover advantage and have that advantages of working with them and accelerating the commercialization of our technology. And then finally, all of that, we believe, has led to a breakthrough for us to establish that foothold in the European market. And then just want to finish off the slide by drawing the attention to the top right corner here, where the ISO 56000 Innovation Management System has a dashboard where they look at 3 criteria, feasibility, viability, and desirability. And of all of those categories, we're scoring really high. So the technology is feasible, commercial is viable, very high. And by virtue of being invited into the European market, demonstrating very high market desirability. So the next steps for Iondrive going forward is to proceed with a pilot plant stage. We've got it staged, sub-staged in 3 stages. So the bottom schedule here. Stage 1 is the preparatory experiments that we're doing. The team has already started with that, and they'll conclude that in December. Then we'll have a 6-month stage to do the semi-continuous unit operations. So every process unit operation will be run in a continuous mode to move from batch to continuous. And then at the end of that 6 months, we aim to have the pilot plant designed, and that's fully integrated and running in continuous mode so that we can start with operations there. So that's the pilot plant activities. The wood concept study for that pre-treatment process to quantify the CapEx and OpEx and get a better, a more accurate number on what those additional costs could be for our process. And then thirdly is the independent economic modeling to develop those NPVs and IRRs for different business cases. And from an investor point of view, I think everybody really interested in understanding how we're going to fund this. So the non-dilutive funding really important. A number of grants that we're applying for in Australia and Europe, and then noting that we've backed by very strong investor support with our cornerstone investors that remain on the jury, and will co-fund activities as we're going forward. All right, Aidan, that's my story. So over to you for the Q&As.
Thank you, Abe, for a great run through, and congratulations to you and the team on all that progress to date and a fantastic result from the PFS study. So a reminder to attendees that you can post any questions now via the chat function. So while they're popping up, I'll maybe Abe, you 25 years of experience. Just while we're waiting for questions, maybe sum up for us, what's the 3 or 4 key takeaways investors should have on the recycling tech on Ion, and what makes it such an attractive investment opportunity for them and you, and always looking forward, what 2 to 3 key milestones should investors be looking out for in the coming months?
Yeah, so Aidan, so firstly, the pre-feasibility study has really underscored that we've got a very exciting technology that's technically feasible, commercially viable, and it's got that desirability from the market. So, leading into the next stage, the pilot plant stage, which would be more reflective of a commercial operation, and do the process optimization and ironing out things that we don't know. So, when you've got an integrated process with closed loop streams that are recycled, you get things like buildup of the impurities that you need to remove. So all those lessons learned for the pilot plant is really, really important. So that's the first milestone, is to get that established. Secondly is to build on the industry partnerships in Europe with PEM and TNO in the Netherlands, and really establish that consortium of industry partners that are all involved in they call it the value circle of battery recycling. So, and the objective of that consortium is to establish a battery recycling industry for Europe. So very exciting to have been invited into that consortium and assist with establishing that industry sector. And I think probably the third thing is also, of interest as milestones is the funding that we're doing going forward, all the co-funding and funding requirements that we've got. So I think those are 3 news stories that investors can look forward to.
Great. Going to jump into a few questions, and do keep posting them as I get through them. Can you please delve a little deeper into exactly what the market opportunity for this tech is in Europe, and what's the competition landscape like? What are the alternatives?
So the competitive landscape is emerging. There seems to be conventional hydrometallurgical processes that is not really favored in Europe because it leaves such a large environmental footprint. So, battery recycling has been dubbed urban mining, and Europe doesn't really have a mining industry, especially in countries like Germany, and especially not in the Netherlands. So that's quite intimidating to them. So the value proposition of having a green process with a much smaller environmental footprint and benign organic solvents in a closed loop process, that really resonates with them. And I guess on the strength of that is why we've had the invitation to participate in this consortium. So that's really not attractive. The other, what we've mentioned is also that early mover advantage. Although there are a number of companies that have aspirations to start up more environmentally acceptable processes in Europe, we believe that from expert advice that market is going to be consolidated. So really important to accelerate our commercialization pathway and securing that early mover advantage.
Right. We've got good questions coming through, so keep them coming. Just seeing here one that's a follow-up to that. How established is the recycling industry today in the EU, and why do you feel the early mover is an advantage?
So if we look at battery recycling as the industry as one of having 2 components. The first is the collection of batteries and then disseminating and grinding them up to black mass. And then the second part is extracting the valuable minerals from the black mass. So the first stage is fairly well established. So there are a number of companies that produce black mass, but all of that black mass is then exported to Asia. So none of it is currently being processed. So that's, for us is the opportunity as a black mass processor is to come in early with that early mover advantage and securing that market share.
Great. Someone here with a historical view maybe of the industry. Battery recycling, I've heard, is difficult, dirty, and dangerous. Has your process any negatives in this regard? You said it's greener, but how green?
So again, looking at it in the two components of battery recycling. So the first stage, the collection of battery and taking it apart and so on, that is certainly very dangerous. It needs to be discharged, and it's still at the high risk of flammability or explosion. And then the second part, the black mass processing, is black mass is toxic. It's a hazardous material, and so China has actually started banning the import of black mass because of the hazardous of the material. So having a hazardous material that goes into a clean green process where the toxic components are removed and destroyed, and the impurities that are actually valuable, being graphite, aluminium, iron, and copper, and so purified and then sold not as a waste but as a byproduct with high value, and then having the main process that is in a closed loop process with very little wastewater and very little solid waste. That's a significant point of differentiation, but also attraction for the European market. So to summarize your answer, yes, battery recycling is dangerous and toxic. That's why it can't be landfilled, because it's got the PFAS materials in, the everlasting chemicals that toxify groundwater. So dangerous and toxic, but our process converts that into valuable materials with very little environmental impact.
Right. Just slightly off track from that. Any opportunities locally for establishing recycling plants here in Australia?
Yeah, so Australia is a much smaller market, even though it's a huge country. So just by volume of people and the slow uptake of electric vehicles. But if we look at the battery recyclers that produce black mass, they've started with massive expansion plans across the major cities. They export predominantly to South Korea. So there's going to be a critical an inflection point with critical mass of black mass coming online in Australia that will justify a commercial operation to extract the metals. There's no doubt about it. It's just on a slower pathway than Europe.
Couple of questions here on changing battery chemistries and technologies. So perhaps this first one, how will the economics of your process stand up when black mass will be more LFP and not NMC?
Yeah, so LFP recycling has not been shown to be commercially viable yet. And our process is focused on NMC. So we're not too concerned about that, given that all the market research work that we've done with credible institutions like RoMotion and Benchmark Minerals Intelligence have shown that in Europe especially, the NCM battery chemistry is going to remain in place for a long time because of the high energy density that's preferred by the European market, compared with LFP that's cheaper but lower energy density. So I think the short answer is there's place for both of them. It's going to be interesting to see how LFP is recycled profitably. At the moment, it's not. So, and our focus is on NCM chemistry, Having said that, our relationship with the University of Adelaide, where we've got a strategic partnership agreement with, we've got a number of continuing projects with them to advance not only the recycling technology, but other technologies as well. And certainly one of the sub-projects is LFP recycling, and then also direct battery recycling. So we'll see what comes from those studies and whether it can be commercialized profitably.
In the economic assessment, the revenue versus the competitor and the benchmarking on a like-for-like basis has a definite advantage. What are the key drivers of that difference?
So it's those two things. One is higher recoveries in our case compared with the benchmark, and the second thing is the product mix. So the competitor products is predominantly sulfates, so cobalt, nickel, and manganese sulfates, whereas our product range is hydroxides and oxides with a common denominator of lithium carbonate. So that product mix combined with overall higher recovery rates translate into higher revenue.
Question here on a couple of questions on support for the industry. There's been many leading energy transition technologies that have received government, industry, and grant funding. What is your view, as much as you can share, on the potential of this for your technology?
So it's in both jurisdictions where we are active, in Australia and Europe, and we believe it's very favorable. We are applying for a federal grant, the Industry's Growth Program grant at the moment, as well as future grants that we believe are coming on stream. For example, future manufacturing that Australia, I think that's something like a 25 billion Australian dollar grant that's been announced in concept, and I believe that the details of that will be announced shortly for applicants to consider, and other Australian grants. And then certainly in Europe, there's a plethora of grants that are available either at the state level or federal level or European-wide level. So PEM Aachen University, that we've got the collaboration agreement with and setting up the consortium, they've started applying for a number of grants in Germany, and the Netherlands will do the same. So yeah, it's a very exciting landscape to see the support for clean technology, especially in that energy transition spectrum.
That's on the money side of the support. Question here on a bit more detail on what those regulatory tailwinds in the European Union are, and can you provide some more details on that?
So it's a number of things. Europe is very different from the US and how they've approached the energy transition. So very much a carrot versus stick difference. The stick being the regulatory mechanisms put in place in Europe. So the first thing worth mentioning is the battery passport concept. So that's really interesting in where electric vehicle OEMs are responsible for the end of life of that battery. So if the electric vehicle comes to its end of life, the OEM manufacturer is then responsible for the recycling or repurposing of that battery. So the battery is not the vehicle owner's responsibility, but the vehicle manufacturer's responsibility. So that drives a certain behavior. Secondly is landfilling of batteries have been banned, and there's plans put in place to ban the export of black mass out of Europe. So that's really important for Europe to have better access to the supply chain of critical minerals that's currently mined minerals or virgin metals, as that supply chain is currently sewn up by China. So having those metals available in recycled battery materials give Europe access to that supply chain. So the banning of black mass out of Europe will secure that supply chain within Europe. And then a fourth element worth noting is that the batteries of electric vehicles from 2030 onwards, and in the case in Netherlands 2027, is those batteries need to contain a percentage of recycled metals. So starting at an average of 6% and then ramping up to 60% recycled nickel, cobalt, manganese, and lithium by 2040. So those are some of the regulatory tailwinds that we're very excited about.
Lots of support there in Europe. There's two more questions, so if anyone has any more, do ask them now before I ask these final two. Talking about support or lack of, how do you anticipate the impact of the US presidential election and Trump's election on battery recycling and Iondrive?
So I've been watching with interest some of the responses this morning in the media, and I think if we look at the credible partners that we've been working with Romotion and BMI, their view is that two things that's really interesting. One is it's going to be very difficult for the Trump government to repeal everything that has already been put in place by the Biden administration with the Inflation Reduction Act, in that most of those developments have been implemented in red states. So electric vehicle manufacturing, battery recycling and manufacturing. So we believe that, or they believe anyway, that there's not much that you can do to change that around. But in terms of going forward, to the second point, if there is a lack of investor opportunities within America for that energy transition, they believe that funding opportunities will move to Europe. So those US investors will invest in Europe, which again for us is very exciting.
We have had another one add, so two to go. As an investor, keen to see lots of news flow, entering the pilot stage. Will I have to wait now 12, 18 months for the next set of results?
So yeah, if we look at Iondrive's news flow over the last 12 months, there's been a consistent flow of very newsworthy items, and we anticipate that to stay the same, even though a pilot plant could be considered as a long phased kind of approach. We've substaged it to do the development work, each with its own announcements. So there's going to be plenty to be shared on the technology development side. But more importantly, on the commercial development and the market development, the progress with a consortium, further establishing those industry partners within Europe and progressing that pan-European drive to establish a battery recycling industry for Europe. All the funding that is associated with it, so grants, all the co-funding, there's a lot of investor interest to not participate, which we can't talk about. But there's going to be heaps of news flow over the next 18 months. There's no doubt about that.
Right. Another question just on that one. What is the scale of the pilot plant?
So we're looking at having a continuous feed rate of 1 kilogram per hour of black mass. So that translates to between 2.5 to 5 tons a year, depending on how, what hours you run it on a weekly basis. So yeah, so that's a significant step up from where we are, and it's a really good size operation to quantify the important process parameters.
Right, a final question on the battery recycling. Hard to benchmark Ion valuation wise. Not many listed names locally in the space and kicking goals. Where should we look for valuation comparisons or benchmarks?
Yeah, so that is a difficult one because there isn't any comparable companies in Europe, for example, that is doing what we're doing. So nobody is processing black mass. So what we're in the process of doing is looking at technology companies that have been in a similar stage of where we are now, and also recycling companies in the US, and try and gauge what their market valuation was at that time, if it was indeed a listed company, and then how their market cap has increased over time. So we're looking at doing some kind of benchmarking on a market cap point to understand what our true market cap potential is. Certainly the view is that we highly not undervalued compared with what other companies have not achieved. And our task is to get that information collated as information in a graphic that we can point out the undervaluation.
Great. Thank you, Ebbe. I think that's all the questions pretty much covered on the battery tech. So if there's any further questions, do send them through and we will get back to you. But yeah, great progress. Has been an incredible 12 months of advancement of the technology. And as you said, with the pilot plant starting, I think the next 12 months will be equally as exciting. And hopefully the valuation starts definitely reflecting that a bit closer. So we look forward to getting you on again for future webinars to update us and the market on the progress that you're making.
Right. Thanks, Aidan. Thanks for all the good questions, everybody. And great to share the journey with you.